Hi, and welcome to the Pit, Personal Investment Tools and Techniques. My name's Lundy Hill, and I hope I can impart some knowledge on trading to you. Please note, this is not investment advice. I am not a financial advisor, and past performance is not necessarily indicative of future results. Today we're going to talk about Elliott Wave. I've talked about Elliott before. R.N. Elliott was a chartist and technician that lived back in the 30s and 40s. I'm going to cover a beautiful chart on the ES, which is a mini S&P 500 contract. R.N. Elliott formulated a market structure which demonstrated that that prices move in a fractal nature, meaning you go down in time, they maintain the same structure, the same market structure. Specifically, he states that market action has 5 waves in the direction of the trend, and then which consists of 3 trend waves, and these are separated by 2 counter trend waves. Then after the 5 waves in the direction of the trend, prices will have 3 waves in the counter trend direction. Today I'm going to apply this to the last 14 months action of the ES, which is the S&P 500 mini contract. Further, I'm going to talk about the wave magnitude in price and time and demonstrate the similarity there. This is the ES futures contract going back to 2020. Actually, this is 2023. This is the, late summer and fall and winter of that contract. Stock indices had rallied from the spring of 2023, but this was after a really bad 2022. 2022 was the worst year for the classic 60-40 portfolio. This is what most financial advisors will tell you. 60% stocks, 40% bonds. And we hit, in 2022, it had its worst performance in about 80 years. So if we look at this chart, we start in the upper left at 0. That was the start of the 5 waves down. Down waves are marked with red lines, and up waves are marked in green lines. Note that both the red and the green lines are the same distance, and they are parallel. This is key. So 0 to 1, the red line there is equal to the red line from 2 down, and that is equal also to the red line from number 4 down. Now what you'll note here that waves 1, 3, and 5, those are the primary direction moves, and the primary direction move is down. Waves 1, 3, and 5 move down with roughly the same distance and same time. They're parallel, so they cover the same time. Waves 2 and 4 are the counter trend waves. They move up at almost exactly the same distance in price and time. So they're parallel, so that covers the same amount of bars. These are daily bars again. This is pretty amazing to me. Now you can't trade off these wave projections in isolation. I use them to give me zones of, like, for instance, at 0.2. Well, not 0.2, but say 0.4, which is an equal wave up from 0.2, to say, well, we're due for a reaction down off these highs, so I will look for a sell point. So let's go through this. Wave 1 ends with a 3-bar equilibrium at number 1. This is covered in my father's book. Wave 2, well, all these are covered in my father's books, and I can give you a link for that. Wave 2 ends with a reaction, retest, and a failure. It goes up, comes back down hard, goes back up to test the highs, and fails immediately and has a 2-bar flip-flop there. Wave 3 ends with a retest and a spring. So it has a retest, makes a new low, but then springs up immediately and starts the next leg up. And then wave 5 ends with another 3-bar equilibrium low. And that was the time to come out. After this move down, we're ready for the next primary move, wave up, on the next higher time frame. I'm not going to cover that here, but if you go up one time frame, like I said, it's fractal in nature. You go up in time frame, it's going to have a similar pattern. So this moves the moves up here are 0 to 1, 2 to 3, and 4 to 5. I haven't marked the counter trend moves. So the green lines again are charted from the first wave. They're parallel and they're the same distance. Note the similarity in the wave distance and time. Note that wave 2 to 3 goes 4 bars, so 4 days more than the wave 0 to 1. But I projected wave 0 to 1 from wave 2 to 3 and then wave 4 to 5. Now compare the move from 2 to 3 to 4 to 5. Both of those moves go 4 bars past what wave 1 did. So if you had projected a wave 2 to 3 green bar from the low at 4, you would have ended up exactly at 5 where you had the top. So let's go through the waves. Wave 1, the top ended with a 3-bar equilibrium down. You see 1 bar up, a congestion bar, and then that one lonely red bar counteracts the first two, the wave up and the congestion bar, and that's a 3-bar equilibrium. Wave 2 then ends immediately with a 2-bar flip-flop. That's a red bar down followed by a complete reversal of that by a green bar up. Green is up, red is down. And then wave 3 ends that wave with another 3-bar equilibrium. And it goes down to wave 4, which ends with a 4-close reversal. That's covered again in my father's books. I can have links below. Wave 5 ended with a bearish engulfing bar, major red bearish engulfing bar. And we moved right down to the congestion zone of wave 4, and then formed another 3-bar equilibrium up. You see the last 3 bars ago, you have a red bar down, a congestion bar, which is a spinning top, and then a green bar up, which counteracts completely the red bar down. So that tells me that we might have more up move to come. But since we've already had 5 waves up in this, I think we might need another wave down from this area to complete the 1, 2, 3 waves down of this 5 waves up. But that would be maybe going to the monthly, or going down in time frame to the daily bars to see another leg down, possibly to the high of that spinning top formation. The key takeaways from this is you need to learn Elliott Wave. You need to do a little studies, find some YouTubes on him, and he will teach you market structure, how the market moves. And once you realize it, it should open up a whole new light for you. And then no reversal patterns. Come up with 3 to 5 different reversal patterns that you put at the Elliott Wave endpoints. And that's number 3. Be alert for these reversal patterns at these key wave projection points. Again, thanks for watching. This is Lundy Hill. If you like this content, please like and subscribe, and let me know if you find this content helpful. Have a good day. Happy trading.